Peter Rose, Longwood Currency Trading. It's a getting to be kind of chilly early November 2021, and getting the wood stove going and having fires in there and having a wonderful time. And just got out of a trade the other day. Actually, it was one that I was talking about in the last video that I did on a different view of profit targets, and I talked a lot about changing the scope of your view as to how you're looking at what constitutes a legitimate profit target. And I got to thinking after I finished that video, and I did a blog post, by the way, on that as well. And I think the blog post has probably one of the more important research endeavors that I've done on a YouTube channel anyway, and a blog post. But the blog post brings out some conclusions that I didn't articulate totally in the video. So you might want to check out that video, because after I got done with that and I actually ended up closing the trade that I had discussed on that video, I thought that it might be helpful for those of you that take your time to watch my videos to discuss how to conduct your trading sessions themselves. In that other video, I had mentioned that I had selected a profit target. The thing went in my favor, and then it went against me, and it went in my favor again, and I watched it over a course of a couple of days. And I thought, well, this is just going to be a really long term. I'm going to be in this for the long term. I was convinced that my analysis of the situation was correct, and I was willing to withstand quite a bit of losses because my goal was sufficiently high that I could do that. And even though I wasn't trading with my full position size at the initial output, I mean, I started with 2 lots, and then as it moved in my favor, I staged in another couple of lots, and then held it as it went against me and flopped around a little bit. And then as it became clear that, and I was underwater quite a bit on that trade, as I mentioned in the video, but it did turn around. I went in with a couple of more lots, and so I'm trading with 6 fulls, and ended up with I think it was about $4,500 for about 6 or 8 days or something like that. It held, but the stuff that I talked about in that profit target view video was more than just how you need to view a macro scope of your chart and of your thinking before making certain decisions. And I had done that in this particular trade, and it was the reason that I was willing to take the risk that I did, because of my confidence that in the long view of the economic situation that I'm seeing manifest in price action and order flow on the chart was correct, and so therefore I held and I made the money. But it's more than just making the money and taking the view of the chart. It's how you conduct yourself during the course of your trades. As the Buddhist would say, in order to have a successful life, you need to be right thinking and right living. In other words, you have to, you know, in a kind of a slap happy manner, you could say you gotta you gotta have happy thoughts to have good things happen, you know. And it isn't that the happy thoughts cause good things to happen. The happy thoughts allow you to see the good things over the bad things. The good and the bad are all there in a constant flux of nature. You can't have all bad and you can't have all good. That's just the law of nature, the yin yang. And so our life as traders is not only balancing this flux of emotions in our own lives, but you exacerbate those feelings when you go into trading, particularly if you're going to be a day trader. And I think that's why there's a lot of negative views of day traders by the longer term traders who feel that they're safer. I certainly wouldn't feel safer in taking 150 pip risk in order to make a 300 or 400 pip gain, even though I'm well within those so-called, risk to reward, or what was correctly referred to as reward to risk values, which I think is just complete shit. The point is, I think if you have a bad run of 6 losses in a row at 150 pips, you're not going to be in the game too long. You just not. That's not all there is to it. And so the only way you make those right decisions is by having a right thinking attitude in your life. Look, if your life is all screwed up, you're not going to be a good trader. There's just too much clutter in your life for you to focus on the trade and to enjoy it. If you don't enjoy trading, if you're just trying to make money, why don't you go down to the local mechanic shop and change tires and change oil for a living? You go in and you do your work and you get paid and you go home. You don't have to study anything. You don't have to do anything. Just go home and do it. Right thinking is not that difficult. And it starts with, as I teach my martial arts students, if you don't know, are not familiar with my biography, I've been in the martial arts for well over 50 years. And I've done 40 years of real estate investment, and I've been a software engineer, retired from that after a 33-year career. I've got a lot of life experience, and in taking different facets of my life and things that I do and correlating them all together in this right thinking, right living paradigm. And it's not that tough. When you swing your feet off the bed and they hit the floor in the morning, it's got to be a good day. That's your choice. You could choose to have it a good day, or you could choose to have it a bad day. Or you could choose nothing, in which case it's going to be a bad day because you're not making a choice. So it's 67% against you when you're getting up. You've got to force that today's a good day. In the martial arts, I teach my students to say, I am happy, I am healthy, I am terrific, I am calm. Love me, happy, healthy, terrific, and calm. Because if you don't love yourself, you're not going to be happy, healthy, terrific, and calm. And so as soon as I get up in the morning, I'm happy, healthy, terrific, and calm. Even though maybe I'm not so healthy. I had some minor surgery done on my shoulder the other day. It hurts. It's sore. I can't do things. Every time I move, the stitches rub against my shirt. It's painful. But I got up this morning and I thought, that's over with. In another 4 or 5 days, I can have a glass of wine. I can do things. I can haul some wood in for the wood stove, which you can't do now. I'm not supposed to lift anything. But it's a good day. I could get up and bemoan the fact that there's certain things that I can't do right now, or today is bill paying day, or the dog pooped on the floor, whatever. It's your choice as to what you want to focus on. And when you sit down at that trading desk, and you're going to be thinking about trade entry analysis, if you're pissing and moaning in the back of your head about some asshole that cut you off on the highway, or your boss is crabbing at you, or you got hemorrhoids, or whatever your issues are, you're not going to have a successful day at the trading desk. You're not going to be able to evaluate that entry position to say, yeah, this is really worth taking a $500 risk. few people make $500 a day. That's $100,000 a year, right? I know that because I've made that kind of money. You can't be successful at anything if you have little demons running around in your brain telling you to do stupid shit. I joke a lot of the time and I say, up on my left shoulder here, I have a little bridge troll. His name is Ed. And Ed tells me to do stupid shit all the time. You know, and when I listen to Ed, bad things happen. Well, I can't pay attention to Ed. Ed doesn't go away. He's always going to be there. He's always going to be whispering in my ear, hey, Peter, do this stupid thing. I have to make the choice not to listen to Ed. And when I'm looking at the trade entry analysis that I'm doing, I can't look at it through the eyes of greed. I have to look at it through the eyes of fear. How much could I lose? First you identify that there's an opportunity. Then you have to identify what's the probability of loss. Because I set a short stop, my probability of loss on the entry stop is fairly high because it is short. So I have to be really good about my entry. The worse you are in entry theory and analysis, the larger your entry stop is going to have to be. But if you're bad in entry theory, it means you're not really a good trader, and so you have a crappy win-to-loss ratio, which makes it more likely that that 20 pip stop is going to get hit, and that you're going to lose, I don't know, what are you going to lose? 4 or 5 times if you're jump ball trader, you're a 50-50 trader. And 50% of the time you lose 20 pips, and the other 50% of the time you make 15. It's not going to come out good for you. So to compound a lack of ability with personal demons running around in your little cranium is really not a good idea. And you're not going to sit down at the trading desk and say, I'm happy, today's a good day, and then start doing entry analysis. That isn't going to work. You have to be interested in making your life good so that you can enjoy the trading as an intellectual exercise. And as a result of being good at that, you'll make money. You see how all these things are connected together. How do you conduct your trading sessions is the same way that you conduct your life. If you're an asshole in life, you're going to be an asshole in trading. I'm sorry, that's just the way that it is. Now, my channel is to bring my expertise in all these different areas to bear on the currency trading, which I've chosen now. I've retired from my real estate. I retired a millionaire from my real estate investment. And if I was 25 or 30 or 40 years old and starting my serious asset and wealth management growth career out, I would not do it in real estate. Even if I was 25, I wouldn't do it in real estate because of what I know about real estate and about what the conditions are currently. The conditions for investment in real estate right now are not the same as they were 40 years ago, 30 years ago, even 20 years ago. I was buying real estate 20 years ago. I chose to, when I retired, I had several buildings and was managing them. When you're retired, it's pretty easy to manage buildings that are fairly self-sustaining. There's that much to do. Pick up the rent. Bang on somebody's head that doesn't pay the rent. It's pretty simple if you know how to do that. But I chose to liquidate my portfolio and then start working in the currency markets. because of the poor education that's out there that's available to you guys on YouTube and stuff, I looked at that. I looked at that the same way I looked at how I learned real estate. You talk to people. Well, we didn't have videos back then, but you take courses and you do all this stuff, and all that stuff was legit. If you had somebody telling you something about real estate, that was the way you had to do it, and it had to be right because it was hundreds of thousands of dollars. You can't do that in currency trading. People out there, they're just fools. There's a guy out there saying all you need to do is make 2% a day compounded in 14 months you'll be a millionaire starting with a couple of $1,000s. Does the mathematics work out? Sure, any asshole can do an Excel spreadsheet and show you how rich you can be. But can you actually sit down and trade the way he's trying to teach you how to trade? No, you can't. Because anybody that's stupid enough and foolish enough to say something like that really doesn't know how to trade. They're trying to get you to pay them money so that they make more money from their jabbering than they do from their own trading. Or maybe they just got real lucky and traded at 200 to 1 and they piled up a 6-figure account and then they started trading in a 0.5% risk and they're on that several $100,000 account and they're making $1,000 or $2,000 a day on a 0.5 or a 1/4% risk. So they're going to tell you to do a 1/4% risk on your little 3 mini account. Come on. They don't know how to fucking trade. And they don't have good lives. They're unhappy. You want to be happy in your life. And you want to be successful in your trading. You have to be happy in your trading. You have to make it fun. You know as much as I do, you wouldn't sit down at a poker game if you were upset or if you're drunk or you're mad. You know you're going to lose your money. What makes you think you're going to do any different sitting by yourself in a corner in your apartment trying to trade currencies? You have to conduct your life first in a right-thinking, right-living manner, and then it's easy to map that into your trading. You can't learn that in trading and be successful and then map that back into your life. Because if that's the way that it's going to happen, it means that you're not very successful in your life and you got lucky in your trading. Look at all the folks that win the lottery that end up going bankrupt. They weren't bankrupt before they won the lottery. They might have been poor, but they weren't bankrupt. They were living well, okay, and making ends meet, and they had a little house or nice apartment that they lived in, and everything was great. And all of a sudden they win $3 million in the lottery, and they go fucking crazy. And then they go bankrupt, and they end up owing more money than they had. Why? Because their life wasn't in order first. Look, I've been 50 years in the martial arts teaching this stuff. I know what I'm talking about. You need to really consider how to conduct your life so that when you step up to the trading platform and you're looking at doing trade entry analysis, that it makes sense to you, that it looks good, and that you realize the risk that you're taking and put that into perspective of whatever your win-to-loss ratio is that you develop over time. Okay? The more you trade and lose, the more you learn. And the more you learn what not to do, the more you learn what to do. And your win-to-loss ratio begins to improve as a result of that. The win-to-loss ratio is your metric of how well you're doing in learning trading. And first, it's got to start off as a disaster because you don't know what you're doing. If you'd never been around water before and somebody threw you in the pool, you'd drown. If you'd been around the water a little bit and somebody took you in and taught you how to float, that's the first thing that you got to learn how to do. But you're still going to gurgle and drown until the guy picks you up and teaches you how to float, right? It's the same thing in trading. And that's why I'm such a big proponent of you finding somebody that can talk with you, that knows what they're doing, and can share their experiences with you. And on top of that, be willing to pay the price of whatever the person is asking you. But you be sure that they're straight. I mean, look at these guys out there. They're selling these courses, 15 modules and videos, $500, sign up now. And everybody thinks, oh, I can afford $500. And it's just shit. They're just teaching you what a pip is and what a Bollinger Band is. They're not going to teach you how to trade because they don't know how to trade. They're using 200 to 1 leverage and they got lucky. Most of them. Now, I'm not lucky. I lost all my money because I listened to these fools on YouTube. Really. Once I did the simulated account. I had a $40,000 simulated account and had months in a row where I was doing 15%. And I thought I had it figured out. I'm a pretty smart guy, trying to follow these best practices that these guys are talking about. And so let's jump off of that and go back to this training, these $500 courses or whatever it is. They're not of substance. I found that out. I know I took courses. I didn't take a course from an idiot. I took a $1,000 course from one of the better traders in the country. And it was just stuff. Stuff isn't enough. There's got to be more to it than that addresses you as a person. And I know a lot of you, I've had emails, why do you ramble on this philosophical stuff about the psychology of trading and all this other stuff? Give us this, just tell us how to do an entry. Why should I? Everybody else out there is telling you how to do an entry and they don't fucking work. And you know why? Because none of that stuff works. It's a process. That's why the course that I did, the third part of that course is process-oriented trading. What's a process? How do you put all these pieces together into a process? Man. Just remember that Buddhist advice, the proverb, right thinking, right living. When you sit down at your trading platform tomorrow, or whenever it is you're going to sit down there the next time, think, did you get out of bed that morning with a chip on your shoulder and pissing and moaning? If you did, push the chair back from the trading platform, shut it down, and go get a cup of coffee, because it isn't going to end well for you if you sit there at your desk. You have to conduct your trading life the same way that you conduct your life. If you're pissing and moaning in your life, you're basically giving up on your life. You better give up on your trading because it'll cost you more money and then you'll have something to really piss about. Be right living, right thinking, be happy in your life. Even when things are tough, they'll get better. They won't get better if you piss and moan about it. They'll only get better when you try to find something good to focus on, because you'll be drawn to the light instead of away from it. And when you feel good about yourself and that you're making good choices, then you can sit down at the trading platform and make one of the most important decisions in all of trading that you're going to make. And that has to do with, am I going to take this trade? If it doesn't work out for you, learn from it. As Jesse Livermore said, the only way to get an education in the market is to invest your cash, not simulated, but invest your cash, track your results, and learn from your mistakes. Man, it doesn't get any clearer than that from probably the greatest speculator of all time. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.